Một thập kỷ mới đang bắt đầu. Doanh nghiệp chính là xương sống của nền kinh tế, không ngừng thay đổi, không ngừng nỗ lực vượt trội để vươn lên tầm cao mới. Vượt trội là một cuộc hành trình xuất phát từ sự nỗ lực không ngừng nghỉ mỗi ngày để tạo ra những giá trị mới. Với định hướng khách hàng là trọng tâm, Techcombank luôn đồng hành giúp các doanh nghiệp trong hành trình vượt trội hơn mỗi ngày. Dựa trên việc am hiểu sâu sắc nhu cầu thiết yếu và hướng đến việc gia tăng trải nghiệm của khách hàng, Techcombank luôn không ngừng triển khai các gói giải pháp thiết thực phù hợp theo những giai đoạn tài chính khác nhau của doanh nghiệp vừa và nhỏ. Các gói tín dụng với lãi suất ưu đãi liên tục được triển khai với quy trình phê duyệt tín dụng được đơn giản hóa, giúp cho doanh nghiệp dễ dàng tiếp cận với nguồn vốn từ ngân hàng. Gói 5.000 tỷ năm 2019, gần đây là gói 20.000 tỷ giúp doanh nghiệp vượt qua khó khăn sau Covid-19. Chương trình e-banking không đồng, miễn phí chuyển khoản không kèm điều kiện. Gói Business One, giải pháp an toàn, thuận tiện và tối ưu chi phí cho doanh nghiệp. Thẻ ghi nợ quốc tế Techcombank Visa, công cụ thanh toán tiện lợi cho doanh nghiệp. Dịch vụ chuyển khoản quốc tế và mua bán ngoại tệ trực tuyến qua Fast eBank dành riêng cho các giao dịch quốc tế, giúp doanh nghiệp quản lý hiệu quả và gia tăng lợi ích. Riêng đối với chương trình e-banking không đồng, năm 2019 đã giúp doanh nghiệp tiết kiệm 40% chi phí giao dịch, tương đương 127 tỷ đồng. Techcombank luôn mong muốn hỗ trợ và tạo điều kiện cho khách hàng của mình đạt được những mục tiêu cao hơn, mơ ước mơ lớn hơn thông qua những dịch vụ của mình. Với mạng lưới hơn 300 chi nhánh trên toàn quốc, hầu hết các chi nhánh đều có các trung tâm dành riêng cho khách hàng doanh nghiệp, giúp phục vụ tốt nhất mọi nhu cầu của khách hàng. Tiên phong trong việc số hóa các dịch vụ tài chính ngân hàng, Techcombank luôn không ngừng nâng cấp và phát triển nền tảng ngân hàng điện tử, hướng đến việc doanh nghiệp có thể xử lý tất cả các giao dịch trực tuyến, mọi lúc, mọi nơi, một cách nhanh chóng, an toàn và bảo mật. Tại Techcombank, ban lãnh đạo và đội ngũ cán bộ nhân viên luôn nỗ lực hết mình để nghiên cứu, tìm hiểu những nhu cầu thực tế của khách hàng, từ đó đưa ra các giải pháp tối ưu nhất cho doanh nghiệp. Sự nỗ lực đó được thể hiện bằng các con số tăng trưởng vượt bậc ở mảng khách hàng doanh nghiệp. Số lượng khách hàng doanh nghiệp liên tục tăng mạnh. Hàng năm, Techcombank phục vụ hàng chục triệu giao dịch cho khách hàng qua kênh chi nhánh và kênh ngân hàng điện tử, với giá trị giao dịch chạm ngưỡng gần 1 triệu tỷ đồng. Thu nhập từ hoạt động mảng khách hàng doanh nghiệp cũng không ngừng tăng mạnh qua các năm.
At Techcombank, we have consistently pursued a customer-centric strategy. We have comprehensive financial as well as non-financial solutions for our SME clients, which range from micro SME all the way to mid-corporates. These solutions are delivered seamlessly across our physical network, where we have more than 1,000 sales and service staff across the country, as well as delivered digitally through our leading corporate digital platform. We have continuously listened to our clients and captured their feedback and continued to improve our digital experience. And pleased to say that we are clearly the #1 corporate digital platform in the country. Looking ahead, with the shift in trends of digital, we will continuously extend and expand our offering, as well as improve our customer experience on our digital as well as physical channels. With that, we are extremely well placed to continue to be a leading bank in the country and for SMEs, and continue to support the growth of SMEs. We are delighted to be awarded the best bank in Vietnam, and we will look forward to receiving this award in the future as well. Thank you very much.
Từ cam kết mang lại giá trị cho khách hàng tới các sản phẩm dịch vụ vượt trội cũng như chất lượng dịch vụ đứng đầu đã giúp Techcombank trở thành ngân hàng hàng đầu tại Việt Nam. Giải thưởng ngân hàng tốt nhất cho doanh nghiệp là sự ghi nhận nỗ lực không ngừng nghỉ của tập thể ngân hàng và là minh chứng mạnh mẽ cho chiến lược lấy khách hàng làm trọng tâm trong suốt thời gian vừa qua của Techcombank. Techcombank vượt trội hơn mỗi ngày.
Trong hành trình 28 năm không ngừng phát triển, Techcombank luôn kiến tạo từ bờ lối đến đỉnh cao. Ở bất kỳ giai đoạn phát triển nào, ban lãnh đạo và cán bộ nhân viên của Techcombank đều cam kết mạnh mẽ mang lại các giá trị vượt trội cho khách hàng. Đặc biệt là từ hơn 10 năm qua, Techcombank liên tục đạt những cột mốc mới trên hành trình chuyển đổi, hướng đến vị trí ngân hàng số 1 Việt Nam. Giai đoạn 2016-2020, bứt phá mạnh mẽ và xác lập vị trí ngân hàng số 1 Việt Nam. Giai đoạn 2021-2025 mở ra chương mới với tầm nhìn chuyển đổi ngành tài chính, nâng tầm giá trị sống. Trong bối cảnh đại dịch Covid-19, Hội đồng Quản trị và Ban lãnh đạo ngân hàng dành ưu tiên đảm bảo an toàn sức khỏe, việc làm và phúc lợi cho cán bộ nhân viên toàn hàng. Từ đó, thúc đẩy mỗi cán bộ nhân viên Techcombank khai phá tiềm năng và bản lĩnh hành động dựa trên 3 trụ cột chiến lược: số hóa, dữ liệu, nhân tài để hướng đến những cột mốc thành công mới. Thực hiện thành công sứ mệnh dẫn dắt hành trình số hóa của ngành tài chính, tạo động lực cho mỗi cá nhân, doanh nghiệp và tổ chức phát triển bền vững và bứt phá thành công. Đồng hành cùng đất nước và cộng đồng chiến thắng đại dịch Covid-19. Lan tỏa tinh thần thương hiệu, vượt trội hơn mỗi ngày. 28 năm kiến tạo, mở lối những đỉnh cao.
Good afternoon, and welcome to Techcombank's third quarter and 9 months 2021 financial results presentation. We are pleased to report another set of strong financial results despite the difficulties the country is facing due to the COVID wave 4. With us today are Jens Lottner, CEO, and Bang Trin, CFO, to share more details of the financial results and business updates with you. Bang and Jens will present in English with live Vietnamese translation available as a separate link sent with the invitation. As usual, we will have a separate call in Vietnamese tomorrow for retail investors. We expect today's presentation and Q&A to last about 90 minutes. With that, I'll turn it over to Jens to begin the presentation.
Thank you, and good afternoon, everyone. Thanks for joining. Again, I would just give short highlights of how the quarter looked like, and then Bang will actually go in more details. I think we all know that this has been a rather difficult quarter for the country, and the lockdown was probably more severe than anyone would have expected kind of 3 months ago when we met last. However, hopefully this now has turned and we're getting out of it. And again, it's a little bit unclear, is it just a little bit of rebound or full recovery? I think we will see this as time develops. Overall, I think the quarter probably has shown that our business models are pretty resilient, and I think that has given us quite some comfort and as we also now look into the next quarters and the rebound of the economy. So overall, our results in terms of TOI, and we made around 8.8 trillion in revenues. So that's year on year, roughly 16% more. And if you look into the 9 months for the year compared to last year, and we are roughly up 40%. And I think that has gone across NII as well as an NFI. NII more. NFI was, especially also this quarter, impacted much more with some of the close downs and social distancing, which we had to face with, especially in the south. When it comes to PBT is up and 40% year on year, now stands and for the quarter at 5.6. And it's a combination of, on the one hand, strong revenue growth as we reported, but on the other hand, and it's actually also to the fact that we controlled an OPEX and as well as provisioning, given the fact that we had, and as we said last time, provisioned ahead of time. An ROA and 3.8% and a little bit up, and so we continue to be relatively efficient in our asset allocation, and return on equity and is at around 22%, and which is a clear improvement from what we had last year. CASA is a little bit this month or this quarter, I would say, of an aberration. We had strong inflows on the corporate sides, which are usually much more volatile. So while the numbers are up 49%, I think they will come down in the next quarter. And again, I think we're still on the CASA trajectory we have been on, but clearly on the third quarter have seen some aberrations due to the social distancing and the economic slowdown, and maybe we can talk about it a little bit later. And NPLs are still relatively constant, 0.6%. That probably is the lowest still in the industry. Coverage has come down a little bit, but as we said, we were preemptively putting and writing off NPL, so the loan loss coverage ratio actually had gone up. So right now, and as some of this is materializing, and the coverage ratio is coming down, but at 184%, it's still standing pretty still compared to what you usually would see in the industry. CAR is 15.2%, so again, still very, very strong. So as we expect for the last quarter that SBV might actually increase the credit quotas, we believe we're actually in a pretty strong position to go and extend further credit, because we still believe that there's a lot of demand right now as the economy rebounds, and we want to make sure that we're actually standing with our customers and make sure that there's sufficient funding for the plans and the recovery. So I think these are the highlights. As I said, I think that has been a rather difficult quarter for everyone, employees, customer, the bank overall, but we believe actually we managed through it quite successfully. So we'll leave it now to Bang to give a little bit more details before we then go into the Q&A. Bang, over to you.
Thank you very much, Jens, and thanks for that introduction. Before I jump in, good afternoon, everyone. Before diving into a review of the financial highlights, I will provide a short summary on the economic and operating environment to set some context for our financial results and really the outlook for the remainder of the year. Similar to other parts of the world now, as we shift to more of an endemic response to COVID, the key to reopening economies, including Vietnam, is really increasing the rate of vaccinations. Over the last 3 months since our last update to investors, our vaccination rates have increased significantly. From one dose, it's jumped up to nearly 50% of the population, and for two doses is almost a fifth of the population. This compares to roughly 4% for full dosages at the last update, which is a 12 times increase and 640 time increase on the 0.3% that we reported at the last update. These figures are even higher in the key economic sectors such as Ho Chi Minh City and Hanoi, a big production and economic centers where the rates are actually closer to 60 and 80% in those two cities versus 19% nationwide. Importantly, the key indicators, current indicators we're looking at suggest that we are on track to follow the phased reopening plans that will result in nearly full economic activity by mid-2022, with tourism probably a little bit behind, as that's been one of the hardest hit sectors. So next page, please. Now, after a challenging third quarter where we experienced negative GDP growth for the first time in over 20 years, GDP forecasts have been revised downwards. I think we've seen anywhere from 2 to 3% probably on the conservative end, to 3 to 4% in some cases. However, we do see this picking up in the fourth quarter, so our overall year will hinge quite a bit on our ability to ramp up production in the fourth quarter. The good news is as the global economy recovers, there remains very strong demand for exports. So we are seeing, again, a lot more activity, a pickup in production. Consumption will start to follow in other activities as well. But again, much more constructive after a very difficult third quarter. In terms of the operating environment for banks, let me just highlight that. Team could turn to the next page, please. We're seeing a very favorable backdrop for the remainder of this year, driven by both stable and ample liquidity, by low interest rates, and importantly, the increase in credit growth we would expect from the SBV to support economic recovery in the fourth quarter and beyond. Now, with that context, let me go ahead and dive into the financial highlights for the third quarter and for the 9 months of 2021. As Yen said, despite weathering the most severe social distancing measures and lockdowns since the pandemic began, the performance for the quarter and for the first 9 months continue to reflect the resilience of our strategy as well as our customers. TOI was up 37.9% year over year, as we saw double-digit growth in both NII as well as NFI at 46.5% and 29% for the 9 months of 2021. Credit growth was also up a healthy 14.1% through the first 9 months of 2021, outperforming the same period last year, despite, again, the very difficult third quarter. As Jens mentioned earlier, we continue to manage costs well with a CIR of 28.9%. Some of that was aided by the strong top-line growth. As Jens also highlighted, card did decline similar to the period last year. However, again, this is partly a reflection of the strong growth in credit balances. At 15.2% still remains highest amongst peers. Now, profitability metrics compared to last year up significantly at 3.8% ROA and 22.1% on an LTM basis through the first 9 months of 2021. Next page, please. Now, as we look at the quarter as well as the 9 months, you can see that top line growth continues to be driven by our core business segments. Although you can see in the third quarter the impact of the lockdowns on some of our core income drivers, particularly in NFI, where branch closures and the lockdowns did impact a number of drivers, which I'll mention later. There was other income impact where we had CSR activities that dropped that from previous periods, and then recoveries were a little bit slower. However, as you look at the 9 months, our double-digit growth again in NII and NFI were the main contributors to being able to hit 26.9 trillion in TOI year to date. And as you can see, OPEX continues to be well managed through 9 months. In this uncertain environment, we are still prioritizing investments in technology and marketing. Now, provision expenses to continue to decline year over year, as Jens had mentioned, as we took more specific provisions during the early stages of the COVID pandemic last year. Ultimately, we were able to end the year on a very high note. End the quarter on a high note, despite the challenges, with PBT reaching 5.6 trillion, up 40% year over year, and for the quarter, that was for the quarter, and then 17.1 trillion for 9 months, up 60% year over year. Now let me go into a little bit more detail on NII. NII benefited from the stable NIM in the interest rate environment, as I mentioned earlier, as well as from larger credit balances, as total credit grew 33% year over year, driven by growth in customer loans. So we've seen, again, still very strong underlying credit demand. It's just been a function of being able to engage with our customers. There was some slowdown of activity across certain segments, but again, still very healthy underlying demand. Now, the ample liquidity in the market, again, resulted in low-cost funding for us, both in the onshore and offshore markets, allowing us to maintain a very low 2.3% cost of funds. We've also benefited as well from a well-structured funding mix. I'll talk a little bit about that later, between customer deposits and low-cost funding from credit institutions. As you can see, that number was up 113% year over year. Next page, please. Thank you. On Retail lending really has been very strong. We're seeing healthy credit demand from our customers, although again, third quarter was a little bit more impacted, particularly in the South, as retail customers had a hard time engaging with us given the lockdowns. And SMEs in the South were much more impacted, again, being able to get out and with the lockdown. So activity in the South was particularly hard hit, but we still saw a growth across the rest of our markets. Despite this growth in retail balances, still contribute the most to our overall credit balances quarter over quarter. So again, it's much more a function of being able to engage with us, whether in the branches or elsewhere, but the demand for credit remains strong. There continues to be stronger demand as well, just on the right-hand side, for medium to long-term lending from both retail and corporate customers. This again has led us to really think about and work on terming out our funding base, which I'll highlight a little bit later, in a syndicated loan we just completed recently to better match assets and liabilities. Next, please. The housing market, again, continues to be strong despite the third quarter drop off a bit, as we saw 7% quarter over quarter growth in mortgages. We do expect this to pick up as the activity returns to a more normal level of activity and the economy continues to open back up. For corporates, we continue to see strong growth on the FMCG side, still engaging with our top customers on the recom side. And over the last quarter and year, we did pare back some of our short-term lending to the finance sector. This was mainly to securities firms as we were a bit more cautious on the economic growth due to COVID uncertainties. We do see some of that picking back up as activity recovers, but that was kind of the position through the third quarter. Now on our next page, please. So funding costs, again, continues to be a strength of the franchise. Jens already mentioned that the 49% number is, again, impacted a little bit by some one-off corporate deposits. So we do see that may drop off, but overall the trend for CASA and the strength of our deposit franchise remains very strong. And again, allowing us to maintain a very competitive cost of funds. Next page, please. Despite the drop off in activity in the third quarter, which impacted NFI, we still saw a very healthy year-over-year growth of 29% through 9 months on NFI. All of the fee drivers were contributors, and even with the challenging third quarter, we still were only down 1% quarter over quarter. A couple quick highlights on Banca. We've moved back into a top 3 position on APE and performed well on a relative basis compared to peers during the recent lockdowns with more digitally enabled solutions. So we were still able to increase 10% quarter over quarter. On cards, you could see a lot more impact from the curtailed activity. Cards was the only fee income that did decline quarter over quarter, down 21%, both in terms of dropped off transaction volumes and values. We do expect that to pick up as we move back into a more open economy. Overall, fee income continues to be very well balanced with healthy double-digit growth across all segments year over year. A key strength, again, in managing our bottom line during the several waves of COVID last couple of quarters has been the ability to continue to manage costs while still investing in capabilities and that will drive our growth post-COVID. Our CIR, as mentioned earlier, was 28.9% for the 9 months with the jaws of roughly 11%, reflecting continued cost discipline. As the economy will pick up and continue to recovery accelerates, we will continue to ramp up our investments in the key areas of technology and marketing. But the low CIR does give us room to comfortably increase that investment spend. And as we move forward particularly on the technology side, we recently announced a partnership with AWS as a cloud-first strategy that we'll embrace over the next couple of years. One of the things that we'll see is a bit more other expenses growing as we shift a bit from depreciation and amortization of hardware into, again, more of a cloud payment strategy, software as a service. So that will be reflected in OpEx mainly through others, and we may break that out more over time. On asset quality, again, despite the difficult quarter, we still ended up the quarter very well in terms of asset quality. It's held up very reasonably well. Credit cost is down to 0.7%. As Jens mentioned earlier, our NPLs are up 20 basis points, 0.6% versus the previous quarter, but still very, very low on a historical basis. And coverage again declined a bit, but still very healthy at 184%. In terms of particular customer segments, we did see an uptick in retail and SME. Again, a large part of this was from the impact in the South, which was expected given the extended lockdowns. But at this point, we do not see anything in our reviews that gives us a particular concern, but we'll continue to monitor this situation carefully as we head into the last quarter of the year. On restructured loans, again, due to the severity of the recent COVID waves, SBV has introduced additional mechanisms to support for banks to support COVID impacted customers. We have applied some of this in particular areas. This really again comes in the form of loan extensions, extending the qualifying period for due payments, and the holidays on loan reclassifications. As we've shared in our last update, we're still much better prepared and experienced to manage the COVID stress after our experience from last year. So we again have better rating models and better risk models. And as we keep going through our book, we are seeing the levels of rescheduled loans pretty much stable at this point. I think the key takeaway for this page and on restructured loans overall is that under our various planning scenarios, we do not anticipate a material impact to our P&L for fiscal year 2021, including the application of Circular 03. Now on capital and liquidity, this again has been a strength throughout the COVID waves for the last couple of quarters. Our strong capital and funding position has really benefited us in the form of higher credit limits quotas from the SBV. This has clearly allowed us to continue to meet the credit demands of our customers in chosen segments and economic sectors. And then I was talking a little bit earlier about our funding mix and extending duration. Our strong execution track record, capital position, and credit ratings contributed recently to the completion of a $800 million international syndicated loan. This was a 2-tranche loan, 3 years, and a novel 5-year tranche, first time done so with a true syndication amongst banks. It gives us, again, significant leverage in terms of medium long term, really to support the growth of our ongoing mortgage book on the retail side, as well as being able to meet some of the medium and long term demands from our top corporate customers. So this again, I think reflects the strategy we've had over the last few years is making sure that we have a robust balance sheet, not only to weather storms, but also really to equip us to support growth in our customers as they continue to grow, and will be particularly important as the recovery continues into next year. Next page, please. So bringing this all together, and while our sector peers have not all reported results yet, our operating metrics again held up very well over the recent quarter. A couple of highlights again. If you look at our low funding cost of 2.3%, the CIR of 29.9, and NPLs of 0.6%, and coverage ratio of 184%. These all provide strong competitive advantages as we further invest in critical areas on the digital data and talent side to meet the needs of our customers both during and post-COVID. So with that, let me go into the outlook for the full year. There are a couple of adjustments. I'll just going to mention that. On credit growth, as I mentioned earlier, given the environment and likely desire to bounce back on economic growth, we again are prepared for higher credit quotas, but ultimately will be subject to that in terms of driving credit growth. On NIM, we have not seen the compression on spreads that we had thought we would. And so even with the interest rate subsidies to support customers, we do see that NIM will be finished higher relative to last year. And then on NII growth, again, yes, that both basically is a function of both stable NIMs as well as growth in credit balances. So we do see our ability to outperform the NII growth from 2020. And then on CIR, the other change, again, we still see a strong, again, given the top line growth that we've enjoyed this year to date, and the continued cost discipline, even with the incremental investments, we do CIR. We see CIR finishing more in line with last year and being up from our earlier guidance. In conclusion, in a quarter where we saw the first quarterly GDP growth decline in over 20 years, and in a year where the only certainty was actually living with COVID, we are grateful to be in a position, as Jens mentioned earlier, to support our customers, support our employees, and affected communities. Our financial results for the quarter and 9 months speak to the resilience of our strategy and the benefits from our ongoing transformation as a customer-centric organization. This concludes the formal part of our presentation. We'll take a short break before we resume for Q&A. Thank you.
We'll be back in 10 minutes for the Q&A session. Thank you.
Một thập kỷ mới đang bắt đầu. Doanh nghiệp chính là xương sống của nền kinh tế, không ngừng thay đổi, không ngừng nỗ lực vượt trội để vươn lên tầm cao mới. Vượt trội là một cuộc hành trình xuất phát từ sự nỗ lực không ngừng nghỉ mỗi ngày để tạo ra những giá trị mới. Với định hướng khách hàng là trọng tâm, Techcombank luôn đồng hành giúp các doanh nghiệp trong hành trình vượt trội hơn mỗi ngày. Dựa trên việc am hiểu sâu sắc nhu cầu thiết yếu và hướng đến việc gia tăng trải nghiệm của khách hàng, Techcombank luôn không ngừng triển khai các gói giải pháp thiết thực phù hợp theo những giai đoạn tài chính khác nhau của doanh nghiệp vừa và nhỏ. Các gói tín dụng với lãi suất ưu đãi liên tục được triển khai với quy trình phê duyệt tín dụng được đơn giản hóa, giúp cho doanh nghiệp dễ dàng tiếp cận với nguồn vốn từ ngân hàng. Gói 5.000 tỷ năm 2019, gần đây là gói 20.000 tỷ giúp doanh nghiệp vượt qua khó khăn sau Covid-19. Chương trình e-banking không đồng, miễn phí chuyển khoản không kèm điều kiện. Gói Business One, giải pháp an toàn, thuận tiện và tối ưu chi phí cho doanh nghiệp. Thẻ ghi nợ quốc tế Techcombank Visa, công cụ thanh toán tiện lợi cho doanh nghiệp. Dịch vụ chuyển khoản quốc tế và mua bán ngoại tệ trực tuyến qua Fast eBank dành riêng cho các giao dịch quốc tế, giúp doanh nghiệp quản lý hiệu quả và gia tăng lợi ích. Riêng đối với chương trình e-banking không đồng, năm 2019 đã giúp doanh nghiệp tiết kiệm 40% chi phí giao dịch, tương đương 127 tỷ đồng. Techcombank luôn mong muốn hỗ trợ và tạo điều kiện cho khách hàng của mình đạt được những mục tiêu cao hơn, mơ ước mơ lớn hơn thông qua những dịch vụ của mình. Với mạng lưới hơn 300 chi nhánh trên toàn quốc, hầu hết các chi nhánh đều có các trung tâm dành riêng cho khách hàng doanh nghiệp, giúp phục vụ tốt nhất mọi nhu cầu của khách hàng. Tiên phong trong việc số hóa các dịch vụ tài chính ngân hàng, Techcombank luôn không ngừng nâng cấp và phát triển nền tảng ngân hàng điện tử, hướng đến việc doanh nghiệp có thể xử lý tất cả các giao dịch trực tuyến, mọi lúc, mọi nơi, một cách nhanh chóng, an toàn và bảo mật. Tại Techcombank, ban lãnh đạo và đội ngũ cán bộ nhân viên luôn nỗ lực hết mình để nghiên cứu, tìm hiểu những nhu cầu thực tế của khách hàng, từ đó đưa ra các giải pháp tối ưu nhất cho doanh nghiệp. Sự nỗ lực đó được thể hiện bằng các con số tăng trưởng vượt bậc ở mảng khách hàng doanh nghiệp. Số lượng khách hàng doanh nghiệp liên tục tăng mạnh. Hàng năm, Techcombank phục vụ hàng chục triệu giao dịch cho khách hàng qua kênh chi nhánh và kênh ngân hàng điện tử, với giá trị giao dịch chạm ngưỡng gần 1 triệu tỷ đồng. Thu nhập từ hoạt động mảng khách hàng doanh nghiệp cũng không ngừng tăng mạnh qua các năm.
At Techcombank, we have consistently pursued a customer-centric strategy. We have comprehensive financial as well as non-financial solutions for our SME clients, which range from micro SME all the way to mid-corporates. These solutions are delivered seamlessly across our physical network, where we have more than 1,000 sales and service staff across the country, as well as delivered digitally through our leading corporate digital platform. We have continuously listened to our clients and captured their feedback and continued to improve our digital experience, and pleased to say that we are clearly the #1 corporate digital platform in the country. Looking ahead, with the shift in trends of digital, we will continuously extend and expand our offering, as well as improve our customer experience on our digital as well as physical channels. With that, we are extremely well placed to continue to be a leading bank in the country and for SMEs, and continue to support the growth of SMEs. We are delighted to be awarded the best bank in Vietnam, and we will look forward to receiving this award in the future as well. Thank you very much.
Từ cam kết mang lại giá trị cho khách hàng tới các sản phẩm dịch vụ vượt trội cũng như chất lượng dịch vụ đứng đầu đã giúp Techcombank trở thành ngân hàng hàng đầu tại Việt Nam. Giải thưởng ngân hàng tốt nhất cho doanh nghiệp là sự ghi nhận nỗ lực không ngừng nghỉ của tập thể ngân hàng và là minh chứng mạnh mẽ cho chiến lược lấy khách hàng làm trọng tâm trong suốt thời gian vừa qua của Techcombank. Techcombank vượt trội hơn mỗi ngày.
Trong hành trình 28 năm không ngừng phát triển, Techcombank luôn kiến tạo để mở lối những đỉnh cao. Ở bất kỳ giai đoạn phát triển nào, ban lãnh đạo và cán bộ nhân viên của Techcombank luôn cam kết mạnh mẽ mang lại các giá trị vượt trội cho khách hàng. Đặc biệt là từ hơn 10 năm qua, Techcombank liên tục đạt những cột mốc mới trên hành trình chuyển đổi, hướng đến vị trí ngân hàng số 1 Việt Nam. Giai đoạn 2016-2020, bứt phá mạnh mẽ và xác lập vị trí ngân hàng số 1 Việt Nam. Giai đoạn 2021-2025, mở ra chương mới với tầm nhìn chuyển đổi ngành tài chính, nâng tầm giá trị sống. Trong bối cảnh đại dịch Covid-19, Hội đồng Quản trị và Ban lãnh đạo ngân hàng dành ưu tiên đảm bảo an toàn sức khỏe, việc làm và phúc lợi cho cán bộ nhân viên toàn hàng. Từ đó, thúc đẩy mỗi cán bộ nhân viên Techcombank khai phá tiềm năng và bản lĩnh hành động dựa trên 3 trụ cột chiến lược: số hóa, dữ liệu, nhân tài, để hướng đến những cột mốc thành công mới. Thực hiện thành công sứ mệnh dẫn dắt hành trình số hóa của ngành tài chính, tạo động lực cho mỗi cá nhân, doanh nghiệp và tổ chức phát triển bền vững và bứt phá thành công. Đồng hành cùng đất nước và cộng đồng chiến thắng đại dịch Covid-19. Lan tỏa tinh thần thương hiệu, vượt trội hơn mỗi ngày. 28 năm kiến tạo, mở lối những đỉnh cao.
Welcome back, everyone. We're ready for the Q&A session. Most of you have already sent questions over to IR, but if you have any last-minute questions, feel free to comment in the YouTube chat box, and we'll try to add them into the queue. Okay. The first question will go to Jens. Jens, could you update the key strategic initiatives that have been taken in the first 9 months of this year? And specifically, please also address the supermarket banking CV Life initiative with Masan, the trial results and some of the challenges over the next few quarters.
Yeah, thanks for the question. The focus is, as we had said since the beginning of the year, that we need to build some enabling capabilities. So we're very much on track in doing that. Mostly it is about putting the foundations in order to allow us to scale up. And so we put in 2 new loan origination systems, which will actually allow us to really scale on the lending side, especially as we go into areas like SME or MSME or mass affluent and lending around credit cards. And we then put in, and they are already live, and we will put in the transaction banking platforms for, again, SME as well as retail. So they will be coming in probably in this quarter, and so before the end of the year. And we have started to get ready for and migrating to the cloud. So the cloud-based infrastructure stands. So we start right now migrating the first applications up, and we started to build the data lake. And so all the infrastructure is in place. We are probably expecting that at the end of the year, 50% of our core data will actually be in the lake and then can be used for different applications. So, and in terms of scaling up, being able to not serve kind of the current amount of customers we have, but easily double it or triple it, and these elements are now in place. There are a couple of things, and we kind of course, need to continue to build on, but then there will be a couple of other activities now which we need to do and going forward to use these capabilities. But that's what we had set out to do, and we're pretty much on track to do that. When it comes to CV Life and the Masan and venture, we are still in the testing, piloting phase. We're trying to figure out what is really an economically viable model and to provide financial services in the different points of life and according to the Masan concept. We are testing on different versions of how such a model could look like. Of course, COVID was not helpful, so the tests and the pilots have been not as kind of telling as we wanted them to be, so we will probably extend that. And then there are still also discussions we need to have with the regulator to see which models ultimately can actually be deployed, because this will all be around the right usage of technology. And again, we will also pinpoint to other markets where these models actually have been deployed, but right now might still be a little bit difficult because of existing regulation. So that work is still going on, and we work very closely together. Pilots are on the way, there is a constant discussion, and we will clearly let the markets know when we are clearer of how these models will look like and how we're really scaling it up. But again, there's still work to be done.
Great, thank you, Jens. And before I go to the next question, I just wanted to note that unlike prior sessions, we're not going to read the name of the questioners, because a lot of you have similar questions, and we're trying to combine them together. The next question then will also go to Jens. What will be the bank's focus areas in the fourth quarter and then for fiscal year 2022?
So again, of course, there's the normal initiatives as the economy rebounds, recovers. We just need to make sure that we are actually with our customers. So I don't think that everything has still been worked out, so we're still following up on that. But when it comes to the strategic initiatives, we said, okay, the first kind of 1.5 years will be very much around enabling. So that's what we're going to do. And so we enable. And as I said, infrastructure, cloud-based infrastructure, all that is already in there. I think we need probably one more set of actions, and that is very much around wholesale banking and transaction banking platform for large corporates. And so that is what we will be building on, given the fact that we have covered probably the SME as well as retail, but we still need to do something on the large corporate side. And then in the next step is what we talked about is we want to engage. So engage is that we connect the intelligence which we start creating around the data lake and the infrastructure which we're building, and that we're connecting insights to the front ends, and either be it the branches or be it straight to digital. So there will be quite some initiatives we are doing around digital marketing and a lot of things around CRM, so that we're really connecting and creating the ability to convert data into insights and insights into decisions. And that's the next step. We have a relatively clear understanding of what we want to do, and so we will put the right initiatives against it, the right resources. And then we probably will also focus on the wealth management side. And again, I think we already have a lot of things. I think we have not yet done it in an efficient way that we really put this together into clear offerings for different segments. And we probably have not yet really pulled together some of the offerings around our securities company, mortgages, etc. So we will also try to work on that and make sure that this is a little bit clearer and more compelling and to our customers. But again, we follow very much the plan which we had laid out and kind of as part of our 5-year strategy. So we're pretty much on track. And as I said, we will continue on enabling, but then we will also start moving a little bit more into engaging more of our customers in a more productive manner. And that's what we will be focusing on for the next year.
Thanks, Jan. As a follow-up then, a lot of people are asking about the new app that TCB is launching. Could you share more about it and why it's important to the bank?
So again, I think the way, and we're seeing this very clearly even in our own customer base when we compare this to other banks, we have structurally kind of younger and more digitally engaged customer base, and they're clearly expecting a leading application. So our existing app, while it is still ranked the best in the market, it was not able to scale up to what we are intending to do, which is much more personalized and much more engaging, and gives us the flexibility to actually adjust much faster to the needs of our customers. So the new technology which we're putting in will, on the one hand, really enable that in the background, and probably people will not see it immediately, but again, as we start creating much more personalized experiences, and we needed that kind of technology to come in, and it will allow us to be much, much faster. But you already will start seeing that the whole user experience is very different than what you have currently in the market. So, and we already had a couple of tests where people were saying, well, that is so smooth, maybe it's a little bit even too fast, because a lot of the activities have been streamlined to make it really all within 1 or 2 clicks. So as we put it out, there will be constant refinements, but a lot of this is really, we needed the platform to create personalized, much more conversational, kind of human being-like interactions, and that's what we will launch. So, and we will start the migration probably in November, and then should be done all by December, and we will use a similar platform for the SME side. And so there, on the SME and part, it's why we're actually creating a lot of capabilities really on the laptop. What we will introduce is really a leading mobile app, and so that a lot of the businesses can be done, a lot of transactions, a lot of and payments, etc., can all be done from the convenience of your phone anywhere where you want. So it will be a very closely synchronized experience around what you usually do on your laptop or computer, as well as what you can get in terms of information on your mobile app. And again, the experience, the user design will be very, very different. Speed and will be very different. So again, and we are actually quite excited about what we're putting out in the market. And for some, and I think customers will probably really get used to that new experience. But probably that was the same like when people introduced an iPhone or something like that. So we'll see. And we work very closely with the customers. We'll get it to market, and then there will be constant improvements as we go forward. And again, we will see what the future will hold.
Okay, one more for you, Jens. This is on bank assurance. Could you provide more information about the bank of business in the third quarter, particularly products and services during the lockdown? How did the bank overcome the difficulties in a business that typically requires a lot of face-to-face interactions?
Yeah, so I think we talked beforehand around this tool which we had, ITCB Live, which allows actually a very structured advisory process, where it's very easy for the advisor but also the customer to understand the products, the product features, and all of that. That is a tool which easily can be shared in video sessions. So if you basically use that tool and you have any kind of video conferencing facility, which of course a lot of people have these days, you can actually have the whole advisory process completely online. Then you need an eKYC process, again, which we have also established, and then you need to make sure that the documents which you need, etc., can easily be uploaded, which we also have put in place. So, and frankly, having the branches closed down in terms of advising our customers was not a big impediment. So therefore, beforehand, before the closure, we were roughly probably at number 6, and when it came to kind of a monthly bank assurance production, we then I think went up in August to number 2, then in September and to number 3. But clearly, as we were not so much affected than a lot of the other companies or banks, which were still really relying on that face-to-face and in a physical environment in a branch. And so therefore, we have trained a lot of our advisors on it, and customers were actually quite happy with the experience. And so we're investing more into that, and we will continue to actually expand these kind of services, because we don't believe that the new normal will mean everything goes back to the branches. I think people have tasted and understood what new experiences could look like. So we'll probably expand that going forward. But as I said, right now, having these tools in place allowed us to kind of provide these kind of services in a pretty uninterrupted way.
Thank you, Jens. The next question is for Bang. What were the drivers of loan growth in the third quarter, and what do you see as are the drivers for the next 12 months? And could you also speak about the plans to diversify the retail loan book, i.e. the next areas of focus besides mortgage lending?
As I mentioned in the presentation earlier, we saw healthy growth in a couple of areas. Even with the lockdowns, we still saw growth in mortgages on the retail side. I saw healthy growth in FMCG and to our top recom customers. I think ultimately this year and pretty much last year have been quite an anomaly. As we look forward, very much again in line with our strategy going forward over the next couple of years, is to have a balanced portfolio between corporate and retail. Within the corporate sectors, again, focusing on the economic sectors that we've mentioned before, recom, FMCG, utilities, and financial services, as well as, again, and some of the others. On the retail side, as the question pointed out, besides mortgages, which again will remain kind of a very large proportion of our retail portfolio, as evidenced by the strong secular demand, we will start to expand as we build new capabilities to manage it, is in the unsecured lending areas to our target customer, affluent and mass affluent. I don't think the strategy has changed at all. I think next year, clearly, as we see an acceleration in growth, we'll continue to focus on areas where we have an ability to manage the risk-adjusted returns. I think our low-cost funding allows us to continue to expand into the areas that we choose to focus on. But this, again, is still very much in line with our strategy of focusing on affluent, mass affluent, and then the economic sectors that we've talked about in the past.
Thanks, Bang. Next question is Bang also. What do you see as the risks to Techcombank in this operating environment?
Sure. Look, beyond what we've experienced the last several quarters, I think clearly another wave where there's severe lockdowns would be something that would be certainly problematic. It's more really seeing the impact that our customers have faced or really the overall economy. I think, as we mentioned earlier, our operating model, business model, and many of our customers have actually been quite resilient, but at some point that kind of wears off. So I think barring that, we've also seen some very supportive of a supportive stance from the SVB, as with many bank regulators around the rest of the world, to support customers. We've deployed that to really help them. But other than that, I think right at this point, looking forward, the environment looks to be much more constructive, stable, and the road to recovery should provide a very good runway for us in terms of our business, and importantly for our customers as they both recover and then for themselves invest and accelerate their growth into the recovery.
Thanks, Bank. Next question is also for you. It's given that it's already almost the fourth quarter, could we have an idea about direction for the next fiscal year in terms of NII, NFI growth, NIM, CASA, CAR, NPL, et cetera?
Yeah, I guess we don't really, we did provide some guidance for the rest of this year. I'd say some of the kind of macro drivers will remain into the early part of next year and beyond at this point. I think importantly, credit growth, we do see a more constructive stance from the SVB as they continue to drive the economic recovery for the country. I think cost of funds at this point, we still see favorable, again, ample liquidity and low interest rates, so that should remain fairly stable in the next couple of quarters. I think CASA for us, those types of things, as we've said, Jens mentioned earlier, we have a target over the next couple of years. We are progressively moving up, and as we introduce some of these new capabilities, such as our new app, we do expect to see that grow. So I think those are all, again, very constructive for us. And then NPLs, I think the worst is really behind us. There is a lag effect as we'll see over the next couple of quarters. But again, looking at our own assessments, our planning scenarios, we feel that, again, we are very well positioned. So not giving particular guidance for 2022 at this point, but I would say after weathering last year and most of this year with the ability to manage the business, I'd say the macro backdrop looks very constructive for us going into 2022.
Thanks, Bank. Next question is on trying to understand the various circulars that have come out from the State Bank of Vietnam. Could you speak about the impact on asset quality with and without Circular 3, and what would the NPL levels have been under the old Circular 2 and Circular 11, and how much provisions would have been made under those circulars rather than Circular 3?
Okay, let me take a crack at that. I think the way we look at this, and probably the way that I'd ask analysts and investors to take a look at this, is at the end of the day for us, as we look at our asset quality and the work that we've done, we don't see any material impact to our business and particularly to our P&L. We've taken some very proactive measures, as we've talked about in previous quarters, to preempt a lot of this. But when you really think about it, some of the provisions have been made along the way. What we've seen last year is some of those provisions are being reversed right now. So the SBV, again, has given us the ability to really support customers through this. And we've seen that by doing so, as some of the waves have come and gone, the ability for our customers to come back and be current has recovered. So that, again, it's more impacting timing and in many ways classification to avoid, again, stress on customers. That has been really the focus and the principle behind all of these circulars. For us, we still have to look ultimately through to what the underlying credit quality is, and if we feel again that certain customers would not be able to recover, we've gone ahead and taken those provisions as we've mentioned in previous quarters. So really not looking at it from what ifs from that perspective. It's more what is the impact, how do we mitigate it, and then ultimately how do we support our customers.
Okay, so just to clarify, then what you're saying is that the way that you're managing it is through looking through this and
yes,
looking at the ultimate expected loss.
That's right. So we do look at expected loss and manage the business already. As you know, for those again, the VAS standards are very much backward looking, and we report the NPLs as required under VAS. However, we do manage our book on a forward-looking basis. The two will always be a little bit different when you're comparing NPLs against EL, and certainly for IFRS 9 going forward at some point, that again is looking much more forward through the period. So we are within our guidelines in terms of risk limits, risk appetite, and ECL as well as EL ratios.
Okay, so there's a follow-up question to that then, which is, under IFRS, how much higher do you expect the ECL to be?
Again, this is a bit of I'd say a moving target, right? And we've seen in the last year, regulators from around the world have actually kind of changed because a lot of this reflects the underlying assumptions in the models. So I'm not going to comment at this point. I would just say that we don't see a material impact or comparison other than, again, ECL will always be higher than NPLs, but that has been changing. I think probably worth noting is if you look at the U.S. markets, for example, that is under IFRS 9, you saw a lot of banks have to take a lot of provisions in the last year. You're seeing a massive reversal of that as it impacts their earnings in the coming quarters. So we would expect something similar. We've seen it on a VAS basis. So again, I think for us, we're looking at the materiality and making sure we're still managing just overall asset quality.
Thanks, Bank. Next question is for Jens. Jens, there was a lot of questions about the impact of this fourth wave of COVID in the southern region, Ho Chi Minh City, and the southern key manufacturing cities that surround Ho Chi Minh City. In terms of lending by TOI by region, how much does Ho Chi Minh City and the neighboring provinces like Bình Dương, Dong Nai, and Long An contribute? And do you see that having a very large impact on the bank given the shutdowns?
So again, I think we're probably not so much different than the rest of the banking industry or actually the rest of the country. So let's say 40-50% of our activity is probably in the south. I think if you look at our numbers which we're presenting, you see that the impact is rather limited, because otherwise we probably would have presented different numbers. Again, I think the way how we are focusing on our customers and the kind of products we're having, the kind of segments we're going after, the kind of risk we are underwriting, we are lucky, and especially our customers are probably blessed that they went through a lot of this in a somewhat better way than some of their peers. So while there was clearly an impact, and I think as you see some of the numbers coming through, depending on what kind of focus banks had when it came to customers, when it came to and kind of subsegments, etc. And this will work them in different ways. So I think, yes, and we are seeing roughly the same contribution and then what you would see in the overall GDP of the country. However, as I said, what was the impact? And I think you see the impact, and we have been managed and able to manage through it, and actually quite well. And in terms of the risk, and we talked about it, I think we have provisioned already accordingly. We see the restructuring, and as we see and how, even if it has been restructured, people are coming back, how they take up their payments again, and we don't expect that there will be a massive impact, and that it will be materially different between the north and the south. So from that perspective, expect we are actively involved in that part of the economy as much as others. Of course, there are some which are very focused, but again, we haven't seen or are not expecting any major impact. Nothing what we've seen now, but also nothing what we expect going forward.
Thanks, Jens. There's a follow-up question in the chat box that, maybe I'll just give it to you. Given the COVID lockdown in the South, why is it that a restructured loan balance hasn't really increased much year over year?
So again, some of that is coming in, but a lot of our customers were able to still maintain. And again, if you look through our book, and we were very, very selective. We basically did a review, and bottom-up review of our SME sector, which of course is the most affected. Will have the money to go and keep their commitments on the loan side. So again, did we see an increase? Yeah, of course we saw an increase. But I think that's why we're coming back again and again and saying, of course there is an increase in the numbers, but we don't see it as much as in some of the other banks. We don't think it will materially affect what we're doing. And as you can see in our numbers, we're not, given the strength on our top line, there's no reason for us to kind of staying or hiding something or whatever. It's just not required. And again, we should also understand, and it's not that customers would like to restructure, right? I think that's also a lot of hassle and all of this. So if they can stay on and can continue and basically using the funds, at the same point in time, we actually expanded our lending in the south and in some of these areas, right? So we actually didn't pull back. So we gave even more money to our customers. It was just very selective before the crisis and over the last 12, 18 months. So that right now we don't seem, or luckily our customers don't seem to have the problems.
I want to add to what Jens said and complement this with some additional context. I think if anything, what one can see is that Circular 14 has actually very much served its purpose. The idea was to help customers through acute stress. So what we saw in our loan book last year, it ramped up, then it came down through subsequent waves, right? So we've seen the impact or benefit of having that and working with customers. So it has come down, and then this wave, different waves, as it comes down, we're seeing the some potentially come back on, but net it is actually the balance is where it is right now. But I think more importantly, it's just looking at the principle behind the circular and how it's allowed customers to be able to manage through different periods of acute stress. And I think the rest of it Jens has covered.
Okay. Next question is for Jens. Could you update us on e-banking customers, the amount of transaction and value? How did they perform in the third quarter when you're now starting to see other banks also get into the digital arena?
Yeah, sure. And so again, I think if you see the overall increase in e-banking customers and all of that, and you see that kind of year on year, and depends on what you're looking at. But I think you have the numbers and also in the presentation, right? And we're seeing strong and double digits on growth numbers, and depending on transaction value, etc. I think, and overall, of course, others are coming up and others migrating and their customers. And so you would probably see maybe that some of these numbers are kind of higher in terms of percentages just because the base effect is still there. We migrated probably a little bit earlier than others. We still see actually quite a strong growth also in terms of customers we're acquiring right now through our eKYC channels. And right now, probably this channel, and even if the branches are coming up, is probably stronger as an acquisition channel than what the branches are, and even more to the point that we'll probably start tuning down a little bit, right? And because, as I said, we are still trying to catch up with the infrastructure and making sure that there's enough and robust infrastructure that people can comfortably interact and at scale. So again, the numbers on transaction value, kind of, as you see here, kind of 100%, and in some areas. I think what we are seeing is, and in some areas, like when you look at NAPAs, and there are days where our percentage of total transaction volume can be above 20%, which of course is outsized to otherwise our market share. I think that has come down maybe a little bit. Let's say we were maybe at 21, 22, maybe now we're at 20 to 21%. But again, it's not fundamentally shifting away. But clearly we are in that part, so to speak, we're a little bit the incumbent, so we need to defend that. And that's actually why we're bringing up the new apps, right? Because we need to bring up new experiences and make sure that people still see us as the preferred kind of preferred app for all their daily banking needs. So again, we're still growing. I think others might have kind of larger numbers in percentage because of the base effect. But again, if I look through some of the comparison, like what is our total market share on online transaction, digital transactions, I think we're still holding up and pretty much, but clearly we will be the guy and others are coming after.
Great, thank you, Jens. Next question is for Bang. The media has mentioned that up to 600 billion in interest support for lowering interest rates for customer was made. What impact is this going to have on your profit before tax, and will there be any partial or full offset due to lower cost of funds?
Thank you for the question. Maybe I'll start by saying the interest waiving is just, again, part of our commitment to supporting and sharing the difficulties that our customers have faced through COVID. Even though, again, we've seen that our customers have been quite resilient over the last several quarters. But this, again, is an additional mechanism for us to support customers in addition to restructuring loans. And ultimately, our ability to do this and comfortably do this is a reflection, again, of our business model strategy. As I mentioned earlier, at 2.3% cost of funding, lower risk costs, as you've seen, and OPEX, it allows us, again, to be supportive of our customers. And we've talked about this over the last few quarters, as well as, again, funding mix as well. So, look, I would just say, whether it's 600 billion or need for greater, we're prepared to support our customers. We have the capacity to do so. We will continue to do so. And we believe these measures will really help us, again, engage a lot more with our customers going forward. But ultimately, we don't see a material impact from a P&L perspective. But again, I think there are two separate issues here. And I think, again, sharing the pain has been something that we're very wholeheartedly prepared to do.
Thanks, Bang. Next question is also for Bang. Why did Techcombank's NPL coverage ratio decline in the third quarter while there are uncertainties that remain?
Okay, sure. Look, I would say 185, 184%, I think that's where we ended the quarter, is still very high. at the end of the day, we're not trying to manage towards a particular coverage ratio target. It's ultimately a balance between risk and returns. Right? We need to make sure, given periods of uncertainty, we increase that as we have over the last several quarters. And as we've seen, again, the resiliency of our customers, we're comfortable again at the levels we're at. But ultimately, we also need to balance, the different stakeholders that we have in terms of, again, risk-adjusted returns. That's what we're ultimately compensated to do. And I hope everyone has seen how judiciously we have allocated resources across different parts of our business. So again, in closing, I'd say 184% is the right levels at this point, but not something we're actively measuring a particular level at.
Thanks. The next question is for Jens. Jens, there are reports in the press about an LNG project that's quite large, over $1 billion, that was arranged for PP Power with other banks. What is the expected timeline for this project, and how important is this to Techcombank's 5-year strategy?
So again, as we're all reading the press, probably the best thing to direct that question is probably to the company which is issuing or demanding the funding. So it's actually not our policy to comment on customers. So I think from our perspective, first one is, and of course we want to be engaged in the energy sector. We think it's important for the country, and we also think there are good business opportunities. I think the fact that we want to move away from coal-fired plants to an LNG and ultimately probably even cleaner energy is something which we're full-heartedly supporting, and so therefore, and I think being involved, and as we start migrating away from that is clearly also part where we think, as the country moves towards something more sustainable, and we want to participate in that. Ultimately, for us, the important piece is we believe that there will be more demands from top class and issuers for these kind of big infrastructure related funding on our projects. And again, we would need to tap the capital markets. We need to tap probably international capital markets. And I think the banking industry needs banks with kind of capabilities to arrange for that. And I think that for us is clearly a key part of our strategy to build up that capability. And I think the fact that we're working together and with other banks on that is clearly probably an expression for us that we have done something right in the past. And so for us is, from a total kind of perspective in terms of funding or loans and all of that, probably this is not as important, as it will not really hit also so much on our balance sheet. But I think in terms of being able to provide the right capabilities across a broad range of banking, investment banking and capital market and capabilities, that is actually important for us. We need to build that because our customers, our big customers, large customers demand us, and we want to be active in that field. So from that perspective, clearly is a landmark and deal for us, and we're very gracious that we have the chance to work on that. But then when it comes to some of the details, probably it's better to really speak directly to our clients, because we are not in the position to comment on that.
Great. The next question is for Bang. Bang, do you expect any big increases in OPEX and provision in the fourth quarter? And I think this is combined with a couple questions we have in the chat box regarding the outlook for the year, because a few people are asking if the 19.8 trillion PPT outlook is going to change for the year. So if there is no sequentially down fourth quarter, what does that mean for your targets for the year?
Okay. So I think I provided some guidance at the end of the presentation, on the main presentation about what outlook would look like, and in particular for our CIR ratio and OPEX and what that might imply. So we do see increasing OPEX. It's not significant enough to drive our cost income ratio up to the levels above last year, as I'd mentioned. So we're managing that with discipline. It's still an uncertain environment, but still making the investments we need to. I think what will really drive, if we're looking at PBT, looking at the rest of the year, there are some, there's activities across NFI that will help drive that. I think, again, as it relates to cost, we're actually looking to be pretty tightly managed. In terms of the 19.8, again, if you can see where we are at this point, yes, I'm pretty sure we will be exceeding that. I'm not, again, providing any details at this point, but I'd say reasonably comfortable that we'll exceed that comfortably.
Okay, great. Next question, I guess, is even though it's about the loan, I'll give it to Jens. Jens, could you share some more details about the recently announced syndicated loan, and how does it add to the bank's cost of funds advantage?
Sure. As Bang has mentioned, I think we issued or we basically worked on a syndicated loan, which was 800 million, and we had tapped the capital markets beforehand. So the tranches are kind of 600 million are in a 3-year bucket, and there are 200 million, which for the first time is actually 5 years. And we were able to, compared to what we had issued beforehand, even in these difficult times, we're actually able to bring down the cost of funds. So I think for us, it's at this point in time, given the fact that the country has not yet reached investment grade, that we're actually having the ability to tap the international markets. It is, and for us, an important funding piece, especially when it comes to longer term funding, because there are, of course, the questions regarding mid to and long term funding ratios, and it's very clear that the central bank SBV actually has said that they want to have a kind of more balanced and kind of structure. If you're going more into longer term and projects, you also need to have the correspondent funding structure for that. So given the fact that a lot of our clients demand these kind of longer term and commitments from us, we also need to find the adequate funding structure. And for that one, it is an important piece. And again, as we said, our mix is right now 70% is more than 70% is customer funding, 30% is non-customer funding, and it's just another quiver, so to speak, or another arrow in our quiver, where we just think about how we can optimize our overall funding. Again, I think it's rather for us a cheap way of getting the right longer term and funding, and for that one it's important, and we will continue the tap and the capital markets for that. It's very clear that there's a lot of interest out for Vietnamese good names, and especially Vietnamese banks. It's regulated, tightly regulated, and you can assume that the quality of whatever is out there is actually good. And I think probably what it also says a little bit, there is maybe already a little bit of a discrepancy between some of the good names who can tap these markets, even if the country in itself has not reached kind of investment grade, but I think will also help building the reputation for the market and for issuer names. So again, it's important, and it's especially important for our funding ratios. Again, given the fact that we have been able to control the cost, it will just help on our overall funding cost advantage. If we continue on the CASA side and also bringing the cost down, and this one for creating the right funding mix, and on the long-term side, I think should actually help us to maintain NIM at the levels and we have seen right now, and even if competitive intensity will pick up again, and the margins might be coming under pressure. It's just a very important element for us to provide and secure profitability going forward.
As a follow-up to that, the $800 million that you did this year is quite a bit larger than the $500 million that you just did a year ago, and you've added a longer tenor as well. And I think the costs are similar with tenor longer than some of the state-owned banks that have gone out to the market at the same time. So what is it that Techcombank is doing that's differently in order to get some of these terms?
So again, I think we're running a relatively tight process. I think we're working on the one hand really with very good names, and so in that case, the kind of Indeed or Stanchart, who really worked very intensely with the team. But I think we also, you see, I think there's a question of kind of how other banks are looking at you, right? Because also the question of how are they able to secure country limits, but then country limits also counterparty limits. So they will look at what kind of bank is there, right? And in a lot of the way how we are running the bank is we know that our peers somewhat are rather in the international realm, right? So they will look at CAR ratios, they will look at the way and how we are rated, and they will look into areas like what's the overall funding mix. They will see how have we performed over time. So a lot of the things when we did since the IPO, we report IFRS, and we're clearly applying, at least for ourselves, Basel II. We're having the CAR ratios at level where we think a good run bank and in this part of the world should be. So a lot of that is a little bit maybe outside of what else you would be seeing in the market. But again, I think we rather try to make it very easy for counterparts to just take this through their credit committees. Because it's easier for them maybe to understand that kind of book and that kind of operating model, because they don't need to explain so much about, let's say, the specific environment of Vietnam, but much more about we would underwrite that if this bank would be in Thailand or any of the other markets, which are already probably a little bit more familiar to the international investor community. So again, I think others will tap the market, and I think that's great for the country as such. I think we're always seeing ourselves a little bit as a pacemaker. So, and if there will be more out there who are able to tap 5-year and funding, I think that's great because, as I said, the country and our customers need it, right? So the more we as a banking industry can actually put this together and can establish that credibility, and the better it will be for the country and overall and for the banking industry.
Thanks, Jens. The next question for you will be on CASA. The components of the CASA balance seems to jump around quite a bit from quarter to quarter. Is there something fundamentally changing in your business or trend in CASA?
So, and indeed, it is jumping a bit, and to be fair, given and what we have said before, and that CASA is such an important component, and you can imagine that we're actually watching it with hawk eyes. So what we've clearly seen, and so there was a very good build-up in the first 2 quarters, and the last quarter actually has seen quite a drop. So we looked into where it's going. It's very clear that there was an outflow of entrepreneurs who basically took the money and basically put it back into the business, and as the lockdown was coming in order to keep people current. So when we break it down and we look, for example, at the payroll and customers and the build-up of CASA of payroll customers, it was actually continuing, and it was actually relatively constant. So what we saw is that I think a lot of companies try to stay current and still try to help their employees maintain their salary, and while at the same point in time, and as some of the kind of economic activity was disrupted, used their spare balances which they had on the current accounts to really fund that. And as activity is coming back, actually exactly that amount starts picking up again. So therefore, and there was an exception in this quarter, and again, then it was overshadowed by big corporate transactions, which we're doing, which is again probably a little bit different to other banks because we have, in some of the areas, as we said, we work a little bit more in capital markets, investment banking like transactions, and so therefore it's a little bit kind of volatile. Right now, still, if I take the core CASA, which is really around retail, BB, and all of that, and business banking, and we're still higher than the beginning of the year, and so we expect that usually in the fourth quarter there will be a build-up as people get back into economic activity. So we expect it to still go up where we're ending up at the end of the year. We will see. For us, it's really much more important that we don't see any fundamental breaks in trends or something is going away, but that's not what we're seeing. But I completely agree, there is volatility. That's why I started right at the very beginning and saying, please take this 49 a little bit with a grain of salt, because it might be going down as some of these big transactions are going out, and some of the money which has gone out in order to fund and kind of get people through the crisis, as this starts getting back into the economic system and then works its way into the banking system.
Thanks, Jens. Next question is for Bang. Bang, the bank's CAR ratio was unchanged this quarter at 15.2. There had been some decline in the other quarters. Could you just speak about the expectation and whether you expect it to come back to the 16% level next year? And I think related to that is a question that we have in the chat box around whether the bank expects that it can self-fund growth at a 20% plus ROE.
Okay, great. On CAR, and I think this, maybe to piggyback off what Jens was talking about on the funding, is a lot of this, as we think about it, is around kind of capital and balance sheet management, both tactically as we've needed to kind of look at the impacts of COVID, as well as, and probably more importantly over time, strategically. So again, CAR is, to some degree, in terms of where the range is a function of risk-adjusted returns and the appetite that we have around, again, credit orientation, risk limits, and so on. There's also some factors. Again, CAR is the capital. Most of our capital is Tier 1, as you can see, but also risk-weighted assets. And importantly, risk-weighted assets amongst the SBV guidelines may not always reflect the underlying risk associated with where we lend. We are, as I think it was mentioned earlier, we continue to embrace the newer standards, Basel II, ICAP, going from standard models to more internal models. All of this will allow us to be able to manage our capital more efficiently for the kind of the business focus that we want to take in the risk-adjusted returns. But in short, I think 15% is the level we're comfortable at. We continue to do a lot of work around that and saying, again, depending on where we're shifting the business, let's make sure we have the right levels to support that. As it relates to self-funding, we've said this since their IPO, at 20% kind of organic growth, retaining all of our dividends, as we've shared in the past, we would be able to self-fund the business. I think what we are seeing out of the last 12, 24 months is that the opportunities for growth may accelerate. We've seen our ability to get higher levels of credit quota. We'll look at that. We'll look at how that impacts both our CAR ratio, our capital position, as well as how we fund the business. So again, this is a ongoing piece of work that we think about quite in a very detailed manner. It's going to be incredibly important going forward. I would just say we're very comfortable with kind of the direction and the work we're doing. A lot of the relationships, as Jens mentioned, on the banking side, we've been doing this for a couple of years now with the anticipation of being much more strategic in our funding going forward. So A lot of this was as we designed the last plan, the last 5 years, and then looking ahead, we knew that we'd need to be, again, a bit more precise and strategic in how we fund the business. So again, long-winded way of saying we're pretty comfortable at these levels, but there's a lot more behind that.
Okay, thank you, Bang. We have time for one more question, and it will go to Jens. Jens, what does Techcombank plan to do to ensure privacy and cybersecurity during the cloud-based transformation?
So that is of course a big concern, right? And probably one of the key areas we need to think about as we start migrating more and more. One of the reasons we went into the cloud is actually that we believe that the protection in the cloud, if you think about companies, be it Google or in our case AWS, they probably think about this even harder, right, than we do. And they probably have capabilities which are well beyond what we can do. So I think once it's probably up there, it's relatively secure, it's relatively safe. The way then is the question of on the way as it travels, right? How do we make sure that we are protecting? There are, of course, elements like you hash it and you tokenize the data and all of that. So there are technical issues which we are going and just using really absolute the top-end international standards, and they're very established protocols, how that's working. So the moment it left somewhere our premise, and it is really unable to crack because all the data are kind of disintegrated and then reassembled again and at some other site. So, and that's just what we're doing on the technology side. On the other hand, we are having and we're paying quite some money to professional hackers to continuously try to break into our systems and trying to understand where are the weak spots and are there any loopholes we need to make sure that we cover that. So again, I think we really follow pretty much best practices and to make sure that we're catching that relatively quickly. So that's when data and all of that is moving. But on the other hand, you also, of course, the more you're digital, there are application fraud, there are people trying to rig systems and all of that. So we are investing, which we just have put in. There's a new transaction or kind of a monitoring platform to see that we're monitoring what's happening in transactions. We're trying to put some of that really real time that we're seeing. Are there any strange behaviors? And we're putting a lot of effort right now to put a completely new cloud-based anti-money laundering platform in, which is again at the cusp of what right now banks are implementing across the world. So again, that is clearly a big area of concern, and we are following as much as we can international best practices. But as I said, one of the reasons we're going to the cloud is to make sure that we're actually leveraging what others have so that our data and our customer privacy is much more secure than if we would actually really keep it all on-prem. And that's what we're working on.
Thank you, Jens. That concludes the third quarter and 9 months financial results presentation for Techcombank. As a reminder, the IR team is available for any questions that we didn't have time to get. Please feel free to call or email the investor relations team, and they will follow up. They will answer your questions. And we will also have the replay and the full presentation uploaded on the website, probably after the Vietnamese presentation tomorrow. Thank you again, and see you next quarter.